Our credit score is finally out of here. It's the burden of FICO off the shoulders of millions of Americans, finally. We're going to find out in this video. I will be covering a major shift that has taken place in the lending space when it comes to FICO scores, and it is going to be extremely impactful, but not from the angle that you've been told by content creators all this time. So we're going to dive into the major shift around FICO in the banking and lending space. We're going to be talking about the impact of that, why it was put in inception in the first place, the impact it's going to have on your finances and your wealth, and how it's going to have a really significant impact on the overall wealth gap in this country if everything continues to move forward as planned. So the backdrop of this big change is actually that the Trump administration has moved forward with an act that really was put into place initially in 2018 during his first presidency, where he staged for FICO to be basically replaced as the only scoring mechanism used for mortgage lending. So basically what he's implemented is now where VantageScores can also be assessed during the mortgage lending process. And this is a very significant shift, but I want to give you context as to why. So this shift has been put into place with the FHFA, and this is going to be basically an agency of the government that is basically, tied to the mortgage lending space to keep things simple. And this is going to allow mortgage lenders the ability to now pull both FICO and VantageScores during their underwriting and application process. So what many of you may have seen in the headlines is, this is almost like a complete replacement or scrapping of FICO. It is not by any means, but it has gotten rid of the monopoly that FICO has had for many decades now over the mortgage lending space, where they were the predominant source of risk management or risk analysis when it comes to credit scores. So how is this going to be impactful to you going forward? How is this going to impact the overall economy? And how is this going to affect the wealth gap in this country? Well, that's what we're going to dive into right now. I believe there's a deeper agenda for President Trump in pushing this forward in his second presidency. He has a real go big, go hard, or go home mentality this presidency, this term. And one of his biggest focus points is going to be the economy. And within the economy is going to be the housing market. So let's talk about the impact of Vantage now being accepted in the lending space when it comes to mortgages going forward. So I need to dispel one myth. Vantage scores are not, blatantly better than FICO scores for most individuals. This is not a universal truth, okay? FICO and VantageScores weigh things differently, and this leads to significant differences in scores, sometimes dozens of points. That part is true. But I am a living product proof that my FICO score has been higher than my VantageScore for nearly a year now, based on the way I've been moving around with my credit report. And that's true for millions of Americans. Now, what Vantage does have in its back pocket that FICO has not caught up to completely yet is Vantage has already built in the ability to have rent reporting counting your credit score and on your credit report. This is going to be a significant game changer when it comes to mortgage lending. Now, the deeper story behind this is, what was Trump looking to accomplish or potentially looking to accomplish when it comes to creating this competition in the lending space? This is where it gets interesting. So when it comes to the real estate market Trump is inheriting, transactions are at a 28-year low going into the presidency he's taken over, the term he's taken over in 2025. This statistic is basically going into 2020 or going back to 2023, and things have not gotten any better since that point in time. What that means is that housing activity and real estate transactions have grinded nearly to a halt. They're significantly down from what they were, call it maybe his first term or pre-COVID. And for those of you who are trying to figure out what this significance is, what this basically means is a lot of the U.S. economy, and I'm going to get into the statistics of this in a minute, but a lot of the U.S. economy is being held back by the lack of real estate transactions. So Trump's plan is to really have a huge impact on the economy during his presidency. And he has this little formula that he's been trying to put together, or is looking to put together, to strike up economic activity in the country. One of the biggest things that you've been hearing about the first 6 to 7 months of his presidency up to the time of this recording is having interest rates cut. We know that interest rates going up the last 2 to 3 years or so has had a dramatic impact on affordability for all of us as Americans in the housing market. So what this has done is created a scenario where a lot of people have been priced out because home prices have skyrocketed since COVID. But now you have mortgage rates skyrocketed as well to a 20+ year high, and housing prices haven't come down in most markets to compensate for that. So you have record high prices and you have decades plus high interest rates impacting the lending space when it comes to real estate. This has led to a significant slowdown in transactions, even though we have a significant supply issue in real estate. This is what's kept home prices so high. There's an estimation of 1.2 to 4.7 million homes short in the real estate market, residential real estate market in the United States. That's pretty significant. That has led to a demand issue or a supply issue that's led to a higher demand, which has brought prices up to record highs because interest rates were at record lows after COVID. So that scenario, that supply demand dynamic has led to a significant jump in the median house price in the country. Interest rates have gone up subsequently to cool down the real estate and the economic market as a whole. Now stick with me for a second. Trump wants interest rates down significantly. He's been calling for like a 3-point rate cut, the entire time he's been in office. And for those of you who aren't familiar, that's a drastic cut in interest rates. The prime rate is like 4.5 right now. He wants 3 off of that. He wants 3 points off of that. So that would be like bringing it down to 1.5, if that makes sense for you. That would likely trickle out to a significant cut in mortgage rates as well, because as the federal funds rates has gone up, that has indirectly led to mortgage rates going up as well. The same could be expected if the Fed's funds rate were to drop significantly in the near future. The Federal Reserve has been head off by Jerome Powell, who has been steadfast on keeping inflation as the focal point during his time as the Fed chair. What that means is he's not been anxious to cut rates prior to Trump coming in, and he's not been anxious to cut rates since Trump has come in, citing tariffs as his biggest concern to spark interest rates. As long as the job economy and unemployment rate is in a healthy enough range, he has been focused on inflation, meaning he's been wanting to keep rates higher. Hopefully that all makes sense so far. Continue to stick with me. So what this means is that Trump wants interest rates cut. If he can't get that done during Federal Chairman Powell's term, which is up in early to mid 2026, then he's going to wait it out and he's going to appoint someone that is going to do his bidding. So if you have a significant cut in rates, whether that's during Jerome Powell's time or shortly thereafter, at the latest 2026, you have now a broader base of credit scoring models to pull from, giving a greater flexibility to borrowers, lenders and borrowers in qualifying for the mortgage. So you're trying to increase affordability by cutting rates. You're also looking to increase the baseline that lenders have to work off of when it comes to credit scores. So if an individual's FICO scores aren't working or not good enough to get them qualified or not qualifying them for enough, then you're opening up now where you have Vantage to pull from, which is usually significantly different than FICO, 5, 10, 20, 30 plus points difference. And if that's in the favor of the borrower, that can make a difference on them being able to qualify for a mortgage or qualify for significantly more mortgage. So you put these two things together, you're going to be able to open millions of borrowers in a very short window of time. So let's put a little additional context on this really quickly. How important is real estate to the overall economy of the U.S.? The economy of the U.S. is measured as any other country by GDP, gross domestic product. Real estate makes up somewhere between 15 to 18% of the GDP of the United States as of 2025. To put that in plain numbers, you may be wondering, well, how big is the GDP of the United States? As of the second quarter of 2025, nominal GDP has been recorded at $30.3 trillion. So in case you're doing some mental math in your mind trying to figure out, well, what is 15 or so percent of $30.3 trillion? That's $4.5 trillion. So that means that the United States real estate market is very significant to the overall economic market as a whole, the economy as a whole. So President Trump's change to FICO scores, the credit scoring models, putting Vantage and FICO in competition with each other is way deeper than politics, is way deeper than trying to impact credit scores or not. What he's looking to do likely is create an economic environment without increasing risk. Because Vantage is still a credible scoring model, still a risk analysis. He's trying to broaden the base for borrowers in the United States. If he can get rates down significantly in the next year or so, and then turn around and broaden the risk analysis of credit scores that are pulled, increasing the chances that one of those sets of credit scores is going to allow you to qualify for a mortgage or more of a mortgage, then he's going to create a real estate boom. Does that make sense? So what that translates out to for you and I, if this does play out, there's going to be a significant uptick in activity in real estate. This is going to lead to a significant uptick in the overall economy as a whole. If rates come down, that's sweet for the stock market. If rates come down, that's sweet for borrowing for companies. If rates come down, that's going to lead to more money in the pockets of companies, more money in the pockets of us as borrowers and consumers. If more money is flowing and the economy is heating up, then that basically means that there's going to be more money on the table for us, those of us that are aware, to build out our economic base or our financial base. For those who are unaware of these shifts as they take place, could end up falling victim to the changing circumstances, because this is also going to mean that prices of everything is going to likely go up. That's correct. Eventually, this will lead to inflation again. So this will be a game of musical chairs. Trump making this change to FICO scores with Vantage scores is going to lead to something much bigger than just credit scores in itself. It can lead to a significant shift in the overall economic system and a major wealth transfer in the real estate market, the stock market, and for those who have access to capital. So something I want to leave you with as I close this video out, there's been a quiet but significant shift in large banks, companies, and corporations looking to attack the wealth gap in this country. And one of the major areas they've been looking to focus on and putting money in has been home ownership. There's billions upon billions of dollars sitting on the sidelines in major financial institutions, MDIs, minority deposit institutions, CDFIs, community financial development institutions, and even private companies and corporations. I've even seen an article recently where Progressive, the insurer, is getting in the getting in the fight against the wealth gap in this country by launching a home ownership program, putting money and education towards home ownership. What that basically means is for those of us who are paying attention, you can position yourself to get on the property ladder or to get deeper into the real estate investing game if you're serious and in the right position. As more people are able to borrow towards home ownership, that's going to put more money in the economy, but that's also going to mean that housing prices will likely pick up because that housing shortage isn't going to fix itself anytime soon. So as housing prices heat up and more people can afford to buy, this is going to affect the economy from the job market. So if your job is tied to interest rates and interest rates go down, if your job is tied to real estate, if the industry you're in is tied to real estate, if you are directly involved in real estate as an investor, as a fix and flipper, as a buy and hold investor, if you're connected to the lending space on any level, you see where this is going. The shift that Trump has put in place between FICO scores, Vantage scores, the housing market is way deeper than credit scores could ever be. This is an opportunity for those of us who are paying attention to get significantly ahead, or to at least be hip to this game of musical chairs and this wealth transfer that is already taking place in front of us. So I'm going to close this video out, putting this out as a PSA. Beware of the changes that are going to be coming in the next 6 to 12 months or so. At the worst case scenario, Jerome Powell's term is up somewhere, I believe, in May of 2026. So even if he holds out all the way to that point in time, which I don't know if the economy is going to allow him to, rates are going to likely come down because a Fed chair will be appointed that's going to follow suit. The changes are already in place on the back end for the lending market, where there's going to be deregulation, and now there's going to be competition for credit scores during the mortgage lending application process, meaning more people will qualify for more mortgages. Position yourself accordingly. That is all I'm going to say. Comment down below and let me know what your thoughts are around this shift in the lending space, around the credit scoring space. Let me know what your thoughts are on the breakdown that I've given you and the position that you're in to take advantage of it, or to potentially fall victim to it if you're concerned. Let me know what your overall thoughts are in the comment section down below. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. I want you to get in the comment section, in the description section down below. Tie in with me on Instagram. We're broadening out our base for my pioneers there, where you can tie in not only around financial information, but we're looking to inspire each other on different levels, going even out as far out as fitness. We're looking to increase our quality of life as a whole. So you can tie in with me on Instagram as I continue to show more and more of myself, not only again around the economic and financial topics, but branching out around the overall health and well-being. We also get in the description down below to work with me one-to-one if you're looking to do that, or you can also comment if you want to know an opportunity to work with me one-to-one. The link in the description shows you areas that I specialize when it comes to the finance, to the lending space, the banking space, and how I can assist you in up-leveling your finances so you can get your blueprint for prosperity customized. Other than that, as always, I want you to like, comment, share, subscribe, support the channel so the channel can continue to support you. And I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.